you've not only been successful, like going from like the rags to riches, or I guess riches to rags to riches, but doing it in a really competitive environment, surviving over that time, and not just surviving, but thriving, and then doing it in multiple markets. So, when you went from like your just individual market to finally, jumping the border to a different market, like how did you approach that?
Well, I mean, initially, California is a large state. So when we started expanding from our main markets, we were looking at, markets that are, 3 hours north or south, or 4 hours or 5 hours south of us. So in the same state. And that's kind of our first iteration into going into new markets was, within the same state. The second market I tackled was the Eugene, Springfield, Oregon area. And the reason I chose that market initially was because I had family up there. And so I wanted to get comfortable with our processes and our systems and still have some controls in place. The next state we ended up venturing out into, my dispo guy actually moved a few hours from the market we were looking at. And it just made sense to tackle that state, and that state's in the Midwest. And now we're in states that I don't have any control in. So, but initially, I did it a little more conservative than I would say some people would. I made sure I had some relationship in the market that I was going into to allow me to kind of establish systems and processes that I felt comfortable with. And now, like I said, I'm expanding into. I'm trying to go countrywide at this point in time. So we're setting up some marketing campaigns to start tapping markets all over the country.
Cool. So, I mean, really, relationships and boots on the ground, that has been a key theme with other guests. So you've had that, whether it was family, an acquisition agent that moved, or it was relatively within driving distance if you had to go there. But you also probably still had resources there, but you are now going into other places where you have
Mhm.
much less resources. So let's talk about those. How are you approaching like going into, and I don't know what these markets are, but I'm like say Phoenix, or I don't know, Chattanooga, Tennessee. You probably know people there, but you don't have any hard resources there. Like how are you approaching going into those markets?
Well, so one of the things that I've learned through the years is, people will talk about marketing and they'll talk about markets as if they're all the same. They all operate the same way, and they don't. There's a learning curve. There's things that make sense in California that buyers won't touch with a 10-foot pole in another state. So there's markets that are good for appreciation. There's markets that are good for cash flow. I'm sure you're relatively familiar with that. So, and you got to look at like what buyers are going to respond to if you're going to wholesale, what buyers are going to respond to if you're going to flip. So the first thing we look at is there any demand in a market? Before we even look at a market, is there any demand? And to tell you the truth, Chris, like we've lined ourselves up with institutional buyers, hedge funds, and different buyers that are fairly aggressive across the country. And so one of the things that I look at is, where are my institutional buyers at? If I'm going to go into a market, do I already have a buyer in place that I know their criteria, that they're going to be relatively well versed in explaining what their parameters are? Like, they're not going to buy houses older than this age. They're only going to buy in these zip codes. And if I have those buyers in that particular market, then I'm going to explore that market, because there's always this learning curve to, like, what are sellers going to respond to, what are buyers going to respond to in that market. If I have a buyer that I know their fundamental buying criteria for a market, then I can enter that market and shorten that learning curve, if that makes sense. So we can get our feet in that market, start picking up property, to start getting momentum when we start branching out to other buyers.
Yeah, so you're understanding the macro fundamentals of a market,
Right.
but also like, what does the consumer want? And the consumer for you, it seems like, is hedge funds or institutional buyers that are buying. I would imagine rental properties is probably or turnkey or
They're buying them as rentals. They're buying them as flips. And they're not the only buyers we end up working with long term in any market we're in. But we definitely want to have that relationship when we enter. So the one thing I don't want to do is not have an exit when I go into a market, an established exit. And as long as we have that established exit, we have, like I said, kind of their formula for their buying criteria. And we already know, okay, we got these particular sellers to market to, and let's get in there and start learning who the players are while we're making money.
So are you doing any type of construction, make ready, uplift on these properties from acquisition to disposition? And
We're not flipping per se, but we are buy and hold. Like we're picking up buy and holds in South Carolina. We're wholesaling in Tennessee. I'm looking at an Airbnb in Tennessee right now, options. So from the buy and hold perspective for rentals, we are doing, we're going in there and cleaning properties up and getting them rent ready, or we're getting them ready for Airbnb. We're not doing any fundamental flipping per se. If we're going to exit anything other than buy and hold or Airbnb, we're going to wholesale it.
So if you don't have hard assets local, how are you going in to establish those relationships and find the boots on the ground that you know that you can trust, that are qualified, like that know what they're doing, that's going to help you both acquire and just sell these properties?
So for the acquisition side of the properties, we do everything from our Fresno base. So we're doing everything virtual. For the acquisition side, we have our team locally here in Fresno run all of our numbers to make a decision as to whether or not the property is going to work for us, when we're making the buy. If we need to have somebody see the property, then we'll usually leverage one of our buyers. Again, institutional buyers are who we usually enter a market with, and we'll usually leverage that relationship. For them to go out and see, like we're going to set an appointment with the seller per se to see a property, because in some cases sellers will refuse to sign the contract unless you put your eyes on it. We'll actually leverage our buyer to go look at the property and have them put their number on it. Now that has some risks, per se. If you're working with the wrong buyer, they could go around you. They could give you, kind of false numbers. But again, we're working with established relationships we've had long term. We built some trust base with, and we know they're not going to bite the hand that feeds them. And so that gives us some comfort in that portion of it. We do work with local property managers. For instance, we have some rentals in South Carolina that we've recently acquired. We did a lot of research on and got recommendations from people we trusted. Your network, if you're part of a good community, a good mastermind community, you usually establish a fairly decent network across the country. You rely on those relationships, which I did, to give me referrals for property managers or title companies to work with. And then we do our own conversations with those individuals to make sure that we're comfortable with them. And then we'll give them, kind of test runs. With one property manager, we said, go in, send us pictures, tell us what's going to cost to do this. She came back, it was really reasonable. We gave her a shot. We gave her a budget to go in and do the repairs and make it rent ready. Her turnaround time and the quality of work was good. She got it rented for more than she told us she was going to get rented for $1,800 a month. She got it rented for $1,900 a month. So we're going to start giving her more projects. So we don't put 10 projects on somebody. I'm a conservative investor. I'll give you one. And if you do well, then I'll give you two. And if you do well, then we'll start talking about more. So I don't usually give you 3 or 4 at a time. So that's we just kind of ease into it, and I don't want to say we take our time, because we don't take our time. We're very quick, but at the same time, we're not irresponsible about how we're doing it.
Yeah. In the last 60 seconds, 30 seconds, you're doing this all from a hub in Fresno, California. Well, what are 1 or 2 good tech tools that's allowing you to manage that kind of operation?
Having a great CRM in place is extremely important. I think follow-up is extremely important. Creating relationships and conversations is huge. Having a good, call rail or smartphone to make sure that all your calls are recorded with your team, so that way you can counsel and train your team properly. Virtual is a little different than belly to belly. And, Zoom goes a long way. If you have sellers that, want to know if you're real, you can always jump on Zoom with a seller and have a face-to-face conversation with them when you're not in the same market. And of course, having a seller walk around the house, and FaceTime you to show your property. And we went as far as that, to just see the condition of a property to make a decision as to whether or not it was a good buy for us.
5 years ago, you'd never do any of this stuff. It's crazy how things have moved. So
no, it's nuts. And the belly to belly part of it, it's hard to give up the belly to belly part of things, but it's really not that much different fundamentally when you think about it. So
yeah.